Hi folks, David Waring here again with InformedTrades.com and today's lesson of the day. In our last lesson we finished up our free Forex trading course with a look at one particular broker in the market and how to compare that broker's products and services with other brokers in the market. In today's lesson we're going to start a new course on strategy development with a look at something which is known as the inspiration moment. Today's lesson and the course which will follow was put together by Shaun Overton. Shaun is a valued Informed Trades community member as well as the founder of OneStepRemove.com, a system programming website. So let's get started.
Hi, this is Shaun Overton with OneStepRemove.com in partnership with InformedTrades.com. Today we're going to talk about the first step in developing either a system or a trading strategy, and we'll call it the inspiration moment. This is the core idea you need to build upon and develop the rules, but without it, nothing's going to happen. And a lot of traders express interest in coming up with their own strategy, but they're overwhelmed. And the reason is because there are so many options. There are hundreds of indicators. You could go just based on price action, but there are thousands of ways to describe the price action. So it's really hard to figure out where should I get started. The honest truth is it's going to come from experience. For some traders, it'll be after months and months on the charts for hours a day. Sometimes it'll be from reading tons of books. Sometimes it'll be just from having a conversation with your buddy. But the point is, you need to have some involvement with the market before the ideas will start flowing for you. To give you an example, I posted a strategy on InformedTrades.com based exclusively on the RSI. And you can find all the rules there for the entries and exits and all of that. But the way the idea came to me is from having conversations with traders, and many of them trade the Euro-US dollar, which is trending very severely to the upside. Most traders in a trending market try to pick tops, and these same traders are just getting crushed because they keep selling into an uptrend. And I asked them, well, what's the reason you keep selling? And they said, well, the RSI was overbought, so I thought the market had to come down. Well, after hearing this for the third time, I thought, well, what happens if I buy when the RSI is overbought? Let's take a look. If you look at the Euro-dollar chart that's on your screen now, it's from February of 2008. That's the yellow line. And you can see that the RSI crossed from regular territory into overbought. And from there, it went from around 152 up to just a little above 160. You're never going to come up with a strategy that catches a full move like that, but you can see the potential that RSI has for catching multi-hundred pip runners. It's an exaggerated movement, and that's what you want to find as a trend trader. To give you a sample from the current market, if you look at a pound-yen chart, which should be on your screen now, on July 17th, a 1-hour chart, around 6 in the morning, pound yen went from regular territory to overbought on the RSI, and that occurred around 211 and change, and right now the market's trading at 215.50. Again, it caught another huge runner, but it depends on your exit rules. What we can gain from doing this is we see that this idea does have some potential. It's worth investigating further, and that's what we're going to do in our next lesson, is we're going to take it from being a core concept to how do I develop defined systematic rules and test them as a strategy. This is Shaun Overton with OneStepRemove.com. Thank you for listening.